When it comes to selecting the finest Vanguard exchange-traded funds, investors have 81 possibilities. This can make the decision appear daunting. Nevertheless, if you know what to look for in an ETF, you can cut down your options and select the best. Hello and welcome back to Dr. Invest. Today, we'll see 5 Vanguard ETFs to buy in 2023. So, let's begin. Number 1. Vanguard S&P 500 ETF. A fund that tracks the Standard & Poor's 500 stock index can be used in any portfolio. Every year, investors are reminded that the majority of active portfolio managers are unable to outperform their benchmark indexes, including a huge number of large-cap managers who simply cannot outperform the S&P 500. It also pays to just match the index. Between 1930 and the beginning of 2021, the S&P 500 returned an annual average of little under 10%. According to the Rule of 72, the index has roughly doubled investors' money every 7 years throughout that time. The Vanguard S&P 500 ETF, $378.99, the iShares Core S&P 500 ETF, and the SPDR Portfolio S&P 500 ETF each cost only 3 basis points to track the S&P 500. The S&P 500 is an index of 500 firms, largely large caps and a few mid caps, that trade on U.S. exchanges, and the larger the corporation, the more prominent its position in the index. Apple, Microsoft, and Amazon.com are now the 3 largest corporations in the index. As a result, they have the highest percentages of assets in S&P 500 trackers like VOO. Number 2. Vanguard High Dividend Yields ETF. Among the top Vanguard ETFs for this reason, it quickly stands out. VYM is an index that measures high-yielding, mostly large-cap firms with dividend yields higher than the market average. While there are hundreds of ETFs that offer higher yields, the majority of them invest in other parts of the market that may be more income-friendly but have a higher risk or little to no growth potential. VYM, on the other hand, currently provides owners with a dividend that is double that of the broader market while yet keeping them invested in blue chips with some upside potential. Number 3. Vanguard Small Cap ETF has over 1,460 stocks, the majority of which are small cap. The massive portfolio protects you from single stock risk, which is the possibility that a large drop in one stock will have a large negative impact on your portfolio. Even the top 10 holdings, which include Ohio-based medical equipment business Steris and casino REIT Vici Properties, account for less than 1% of the portfolio. While VB is one of the greatest Vanguard ETFs to hold, it is not without risk. In fact, it could be one of your most volatile fund investments. This is because tiny caps generally struggle when investors become more protective. Nevertheless, when risk appetites return, VB can assist you in enjoying the subsequent development without having to worry about one firm crumbling and setting you back. Number 4. Vanguard Information Technology ETF. Technology is one of the best sector chances since it is permeating every part of the human experience. We utilize technology more at home and at work. Other industries, such as utilities, healthcare, and manufacturing, are adopting more technology into their processes. There always seems to be somewhere where technology can advance. Is the most appropriate Vanguard ETF for the job? This broad portfolio of about 330 stocks includes consumer tech businesses like Apple, software companies like Microsoft, component companies like NVIDIA, and even payments tech companies like Visa and PayPal Holdings. And it only has scratched the surface. Remember that a number of stocks that appear to be tied to technology aren't actually recognized as such. Companies like Facebook and Google, parent Alphabet, for example, were originally considered technology corporations but are now in the communications sector services. Number 5. Vanguard Real Estate ETF. The VNQ has a wide range of real estate, including residential complexes, offices, strip malls, hotels, medical facilities, and even driving ranges. Its top holdings at the moment are telecom infrastructure business American Tower, logistics and supply chain REIT Prologis, and data center REIT Equinox. The S&P 500 does not give investors a fair distribution of its sectors, and real estate is woefully underrepresented in many large cap funds, including S&P 500 trackers. Hence, while you may use sector funds to supplement your holdings in a specific sector on occasion, it may be advantageous to keep a REIT fund such as VNQ in perpetuity to increase your exposure to this income-generating segment of the market. That was it. If you enjoyed the video, leave a like and comment down and tell us what you would like to see next. Subscribe to the channel for more such content. Keep watching.